Hey everyone, welcome back. Today, we're tearing into a financial report that honestly totally stopped me in my tracks. We're looking at the Q2 2026 earnings report for Comfort Systems USA. Now, if you follow commercial construction, mechanical systems, or even just high-growth industrial stocks, you probably already know who they are. But today, through this explainer, we're going to break down their explosive quarter, pull apart the actual levers driving these massive numbers, and see exactly what is fueling this incredible momentum. But before we get completely lost in the spreadsheets and those giant comma-heavy numbers, I want to anchor us visually. Behind all the dry financial data we're about to see, there are physical, tangible projects. We're talking about massive HVAC installations, incredibly complex piping, and critical building systems. This isn't software. This is heavy metal, steel, and ductwork going into real, physical buildings. And as you'll see, the scale at which they're currently operating is simply staggering.
All right, here's our roadmap for this explainer. First, the headline numbers. Second, their rock-solid balance sheet. Third, where the money comes from. Fourth, the multi-billion-dollar backlog. And fifth, looking ahead. Let's get right into it.
Just a quick note before we dive in, here's the standard safe harbor disclaimer. Forward-looking statements involve risks, actual results might differ, and we'll be referencing some non-GAAP measures like adjusted EBITDA to supplement the standard GAAP metrics. Okay, let's get to the good stuff.
Part 1. The headline numbers. We are talking explosive year-over-year growth here.
So I want to use a bottom-line upfront strategy here, because honestly, the raw data from this quarter absolutely demands it. Get ready for this. $3.27 billion. That is Comfort Systems USA's revenue for a single quarter, just the 3 months ending June 30th, 2026. Let that number sink in for a second.
Now, to really grasp the gravity of that number, we've got to put it into context. And this perfectly illustrates the momentum we're dealing with. Look back at Q2 of 2025. They posted $2.17 billion in revenue, meaning in just one single year, they added over $1 billion in quarterly revenue. That is a 50.3% jump year over year. I mean, that kind of top-line expansion in a heavy physical industry, it's practically unheard of.
But hey, as we all know, revenue is just vanity if you weren't actually turning a profit, right? Well, take a look at this. $12.53. That is their diluted earnings per share for the quarter.
And the crucial point here is how this stacks up against their past performance. A year ago, back in Q2 2025, that EPS was $6.53. They practically doubled their earnings per share in just 12 months. This is huge because it proves they aren't just taking on revenue for the sake of pumping up volume. They're executing incredibly well and expanding profitability at the exact same time they're scaling.
Okay, let's look at the efficiency gains driving that EPS. Gross profit margin ticked up nicely from 23.5% to 25.9%. Adjusted EBITDA almost doubled to $605 million. But really look at the operating cash flow. This right here is the lifeblood of any business. It went from a very respectable $252.5 million back in Q2 2025 to an absolute monster of a number, $1.14 billion in Q2 2026. They are literally converting this explosive growth into cold, hard cash at an astonishing rate.
Moving on to part 2, a rock-solid balance sheet, the true financial foundation for all this growth. In construction, if you build a massive skyscraper on a weak foundation, the whole thing is going to collapse. The exact same rule applies to corporate finance. And what's really fascinating about these numbers is just how clean they are. Look at their cash position, sitting on nearly $1.9 billion in cash as of June 30th. Now glance down at the total debt, just $54.1 million. In an industry that is notoriously known for heavy leverage and debt-fueled operations, Comfort Systems USA has basically eliminated their debt burden relative to their cash pile. They've got the ultimate financial flexibility to weather any economic storm, acquire competitors, or just reinvest in their own operations without even breaking a sweat. All right, part 3, where the money comes from. Let's look at the engine of Comfort Systems USA.
So we know the numbers are massive and we know the foundation is solid, but we really need to look under the hood here. If we break down revenue by activity type, one thing becomes crystal clear. They are a pure construction powerhouse. Nearly 75%, 74.8% to be exact, of their year-to-date revenue is coming straight from new construction. Now sure, they do have existing building work and service calls providing a nice steady baseline, but the vast majority of this explosive growth, it's being driven by putting brand new systems into brand new buildings.
But guys, here is the absolute most crucial piece of data in this entire explainer. Who exactly are they building these new projects for? Check out this breakdown. 57.6% of their revenue comes from a single sector, technology. This is not just some broad, diversified commercial real estate boom. No, this is a targeted, surgical strike. Comfort Systems USA is building the physical infrastructure of the digital age. We're talking data centers, advanced tech facilities, semiconductor plants. That single data point pretty much explains the massive scale of their contracts and the sheer velocity of their growth.
Which brings us to part 4, the multi-billion-dollar backlog, which is really their blueprint for the future.
So they're dominating the tech construction space today. But what about tomorrow? Well, if the balance sheet is their foundation, the backlog is the blueprint for their future. $14.06 billion. That is the value of the signed contracts they currently have sitting in their pipeline, just waiting to be executed. And let me remind you, that record-breaking quarter we just looked at generated $3.27 billion in revenue. So this backlog, it represents literal years of guaranteed, high-margin work that's already locked in.
And let's look at how this builds over time, because it really proves this isn't just one lucky quarter. Look at the trajectory here. At the end of 2024, their backlog was hovering right near $6 billion. Fast forward to the end of 2025, and nearly doubled to almost $12 billion. And now, halfway through 2026, they've tacked on another $2 billion. The demand for their services is literally outstripping their ability to immediately fulfill it, which, honestly, is the best possible problem a company can have.
And if you want some real historical whiplash, look at this. Exactly a decade ago, back in 2016, Comfort Systems USA's entire backlog was $763 million. Today, it's $14.06 billion. That is the very definition of exponential, transformational growth over a 10-year period. I mean, they are operating in a completely different stratosphere now.
Finally, part 5. Looking ahead. Are we looking at a cyclical boom or a permanent shift?
We've seen the raw data, but what's the real takeaway here for the broader commercial construction industry? Let's quickly summarize what we've unpacked in this explainer. First, this company is executing brilliantly, delivering totally unprecedented year-over-year revenue and EPS growth. Second, they've fortified themselves with a nearly bulletproof balance sheet, super high cash, practically zero debt. Third, that massive $14 billion backlog secures their financial future for years to come. And finally, their operational engine is incredibly reliant on the technology sector.
And that leaves us with one final, critical question. With nearly 60% of their revenue tied directly to tech, we really have to ask ourselves, are we just looking at a temporary, cyclical boom driven by this mad rush to build data centers? Or does this represent a permanent shift in the commercial construction landscape? Is the massive physical footprint of the tech industry the new permanent driver of industrial growth? It's a fascinating question, and based on that multi-billion-dollar backlog we just saw, Comfort Systems USA is clearly betting heavily on the latter. Thanks so much for joining me for this explainer, and keep learning.